Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. As the day comes to a close here on Wednesday, we look forward to Thursday. And Thursday, we're going to have the CPI data come out of the U.S. Has potential to really push the market one way or the other, or the dollar one way or the other. A stronger number or a higher inflation number would likely send the dollar further to the upside. Something weaker than expected might get traders thinking more that the highs are in place, especially where we are in some of the levels. So let's take a look at some of the levels in play as we prepare for that day, and so that you're ready when the number comes out tomorrow. I'm going to start by taking a look at the dollar versus yen. And what we know about today's price action is that the pair moved above the 145.90 level. That was the high price from last month. And looking at this monthly chart, the next target would go all the way back to this period back here in 1998, I guess, where the price moved up to a high price of 147.67. The high price today has so far reached the level of 146.84. So we're not all that far away from that level, another 80 or so pips from that high price. If we get above that level, that would take the price to the highest level going back to this month, August 1990. So a long time ago, but that would be the target on the top side. So be aware of that level, 147.67. Now let's take a look at the hourly chart. And off the hourly chart, we have this trend line here connecting 2 points. Now we move below it here, but after testing it here, actually there's 3 or 4 points here before breaking below the level. And then we started to reestablish support. This topside channel trend line was broken a little bit in trading here today, but you can see the high price came in at 146.95. That was just short of the 147 level. So getting above the 147 level and then going toward that level on the monthly chart would be the next targets on further upside momentum for the dollar versus yen. On the downside, the lower trend line at the end of today's trading day will cut across right around this level, around the 146.12 level. And as you can see, that trend line is moving to the upside. So by the time we get into tomorrow around the CPI data, you can anticipate that the trend line might be somewhere around the 146.38 level. I'm just sort of eyeballing it there. That would be move below that level, open up the door for further downside. But really, if the sellers are going to take more control, getting back below the 145.90 level, that's the high price that we saw here where we had the intervention, would be a level to get to and through. Today's low price after breaking above that level came in around the 145.98 level, 99 level, right around the 146 level. So 145.90 to 146 even would be targets to get to and through. That would increase the bearish bias. And then we're going to look, of course, toward the rising 100-hour moving average and 38.2% retracement of this move to the upside, which currently comes in at 145.64, and that 100-hour moving average is moving higher as well. So that's my preparation for that currency pair. Taking a look at the euro versus US dollar, and I'm going to go to the weekly chart. You've seen this before if you've watched my videos. Down here back in October of, June to October of 2002, the low prices through this period here bottomed at the 0.9662 level. In trading here today, our low price came down to a low of 0.9667. So just 5 pips away from that 62 level. The low price from yesterday was at 0.9669. So it got within 7 pips of that level. On the downside, getting below the 0.9662 level and staying below that level would tilt the bias more to the downside toward the higher dollar level. Then we'd look toward this low price at the 0.9635 and get below that level. And we're starting to work into the extremes here. These are extreme lows for the year, which on September 26th came in at 0.9545. On September 28th, the low price came in at 0.9535. So targets get below 96 or 62 level, get below the 0.9635 level, and then it opens up the door for going toward our lows. On the top side, what do we have? Well, yesterday's trade, the high price reached the 100-hour moving average and found sellers. Now that 100-hour moving average is moving to the downside, so it's an easier hurdle to get to and through, and we're not that far away from that level, but getting above the 100-hour moving average would be step number one. Getting above this yellow area where we have a swing low, swing low, swing high, swing high, swing low, swing high, broke a little bit below it through here, but reestablished resistance here and here and here, and broke above it here on the way to the 100, but fell back below it. And in trading here today, the price came up to the low of that yellow area, this swing area, and stalled. So getting above that, and the high price at 0.9750, followed by the 50%, and then the 200-hour moving average. Getting above the 200-hour moving average would be required in order to give the buyers more upside potential. So that is the trading plan, the playbook for the euro versus US dollar, the levels in play. The pound versus US dollar, if you take a look at the daily chart here, we of course fell sharply last week all the way down to 1.0353. That's looking more like a the low for now for that currency pair. It doesn't mean that we can't go lower, but in order to do that, we need to see some breaks below some levels on the hourly chart that are much higher. In particular, I want to focus here on the 50% retracement. That's of the move from our low price that we saw for the year at near the 103.50-ish type of level up to the high price that we saw on October 5th. That 50% retracement comes in at 1.0934, and the price came down to 1.024, and the price came down to 1.0922 in trading here today. It's also a swing area between these high, and then break above here. With the price fell in between those levels. So this is the key level that we need to get to and through on the downside if the dollar is going to go higher and the pound versus US dollar is to go lower. Okay. On the top side, we did break above the 100-hour moving average, but we need to get above the 200-hour moving average in order to increase the bullish bias in trading yesterday. Price moved above the 100, failed to get above the 200. Price fell back to the downside. Today we are trying to stay just above the 100-hour moving average, but if we are going to go higher, we need to get above the 200-hour moving average, currently at 1.11893. And then not far away from that level is a swing area. You can see all the levels: swing low, swing low, swing low, swing low, swing low, swing high, break, swing high, fail break up here, swing high, and then finally break above, swing low, and then break below and have the swing high in trading this week, or I guess that's Friday's trade that stalled the move up here and moved to the downside. So we need to get above 200-hour moving average, the swing area. That would open up the door for the pound versus US dollar to the upside. The dollar versus Canada is an interesting pair as well. We are, if we look at the weekly chart, we came up to test these lows through here. Those lows came in around the 138.50 to 54 level. Let's call it 138.52. Price came right up to that level, backed off and trading here, not far off the level. Now, if we look at the hourly chart, here's our 54.8 level high that we had for the week, and the price is currently trading at the 138.22-ish type level. So about 34 pips or so away from that level off of the weekly chart, the high for the week. In between there is this swing area where the price is in between the 138.07 and 138.36. So get above the 36 level, get above the 54 level, and we're into open road for the dollar versus Canada. On the downside, what do we see here? Well, we've seen consistent support near the 100-hour moving average. That 100-hour moving average, which is moving higher, is also currently in this swing area through here, where just earlier this weekend, last Friday, the price came up at Friday and Thursday, I guess the price came into this area here, and then found support against it, moving higher. We did break below it in trading yesterday, but we found support near the 100-hour moving average, moved back above that level. And in trading here today, the price has found support against this swing area. So on the downside, close levels to get below is the 100 in this swing area, And then, like other currency pairs, we need to get below the 200-hour moving average. This level comes in at 137.05, and then we'll look toward this area through here, another swing area where the price needs to get to and through on the downside if the price is going lower. Of interest here further down is the 38.2% retracement. That's of this move to the upside, its trend move to the upside. The low price that we saw in last week's trading found support against those levels, not only in this day, but this day right here, and bounced higher. Ultimately, if the sellers are to take more control, we need to get below the moving averages, below the swing area, and then traders, we start looking toward this swing area. Finally, the 38.2% retracement. That comes around the 135 level. We're trading around 138.23, so that's over 300 pips to the downside. But that would be the progression. That would be the roadmap. That would be the playbook for the dollar versus Canada if this pair is going lower. So there you have it, sort of a plan for some of the major currency pairs here going into the CPI data tomorrow. I'll try to get on early tomorrow and give you some other ideas as the market moves closer to that key data. But it's going to be a good one, and there's a potential for sharp moves either to the upside or the downside. So being aware and being prepared, understanding your playbook for the day is important. I hope this video helped you and has you ready for that number tomorrow. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.